Hi everyone, it's Paul Lange from DTS, and I want to introduce you to what you're about to watch. It's an hour-long event that was presented live to free members at Disciplined Trading Strategies. It is called the most popular strategy analyzed, and you're going to have to tune in to see just what it is, but it's a very educational, very technical video. I think it's something that'll help new and longer-term traders as well. If you do listen, make sure you stay until the end when I discuss the OWL trade, OWL trade. Remember, this is a supplemental video. If you really want to learn how to make money from the market, make sure you get a good education on how to read a chart. If you enjoy this, check out the many other educational events, articles, and Trade of the Week videos that you can get access to at the DTS Free Stuff page. Just go to the DTS homepage and click on Free Stuff. But for now, sit back and enjoy this event. Good afternoon, everybody. Sound check. How's the sound out there? 5x5. Hey, Glenn. Hey, Davis, Dale, Bill, Ben. How's everybody doing tonight? All right. Well, number one, I don't know if I should say this or not. This was the most time-consuming event I've ever done in coming on 7 years. It just, in a sense, it's the easiest one. Hard events are where it's a soft topic, and I have to think how to phrase and convince you guys of stuff. Simple is when there's a lot of charts, because the charts speak for themselves, so to speak. But I just ended up doing a very detailed thing, and I think you'll like how it's presented, but man, it took me a long time. Let's get right to it. I don't think I have any really introductory comments. Let's go. The most popular strategy analyzed. Well, it happened already. Email came in and said, boy, I can't wait to hear what strategy you are teaching. I'll talk about that later. It's going to be a difficult conversation toward the end of this. Some of you more astute people may kind of know what it's about. I didn't necessarily say I was teaching it. Well, I will be teaching whenever I am communicating things about charts. I'm teaching. But I think this is an important one because, again, this really crosses the bridge, in a sense, into teaching somewhat. But it, again, starts off with stop doing the wrong thing, which is part of it. And then, do you really understand what's involved in doing the right thing? So I want to give you some examples here. It's going to be a very jump into it and participate type of night, so I think you will like it. This is what you got in your email. You can read that. You know what it says. Here's what I had to say tonight as additional comments. We will be discussing, ready for this? Oh, anybody take a guess what the strategy is? You should know. And plus, I just showed it on the slide if you were really quick. No, it's the breakout trade. Oh, that's what I want to talk about, Eric, thanks. Yeah, that's why the password is triangle. All right, I'm going to be discussing the breakout trade. Now, first of all, we have to get our semantics right, if you will. This is not about semantics, and what it's about is, you look at a chart, can you make money from it, right? I'm not big on names and labels, right? You look at a chart, the question is, do you know what to do? Do you know how to act? Do you know when to get in? Do you know how to get out? Do you know how to take profits? I don't care what, I always make fun of the double Heimlich crossover maneuver strategy. I don't care what you call anything, but to communicate and talk and teach, I have to use words. So I have to distinguish between the setups that I call setups or strategies and just using the English language to describe something I see. So to be clear, and I have to do this with seminar students too, the DTS breakout trade is a strategy I teach. So when I say DTS breakout trade, that has, I'll talk about it at the end, that has a very, very detailed, fairly long list of requirements to qualify. That's how I refer to it when that's what I mean. But when I just say breakout, I'm just referring to what other traders may call a breakout or just a visual of what's seen on a chart. Did everybody understand what I'm saying? So you can look at a chart and say, oh, that stock broke out, right? You're just describing what happened, right? Oh, that chart's pretty. Oh, the chart's going up. Oh, the chart's going down. Oh, the chart broke out, right? That's how I'm going to use the word breakout when I'm talking tonight, just as an English language thing. Is that clear, everybody? Because it would be very confusing if you don't get that. In other words, when I say, look at this as a breakout, I'm not saying it's a good breakout trade. I'm saying this is a stock that's going to move above something. And some of you may call it your breakout trade because that's what you look at. And some of you may look at it and say, that's just ridiculous. It's nothing. So I'm going to use the word breakout just as part of the English language. I'll be showing you a chart. There'll be some kind of breakout, and they'll be on various time frames. Take a good look at the quality of the setup as a breakout, assuming we do trade above the pertinent area. This is not about, there's no tricking you. I'm not here to trick anybody or say, oh, haha, I didn't clear. This is just looking at this chart and trying to decide what are the good setups to do the breakout. Now, why did I pick this? Why did I pick the breakout? very clear reason. For me, an advantage you have coming to me to hear stuff is that I usually know where the problems are, where the faults are, because I've been doing this for a long time. I talk to a lot of people. I get emails, and I'm in a trading room with traders all the time, and I hear stuff and see stuff all the time. Number one, I think the breakout is probably the most overused, the most common trade that traders pick up first and think it's easy. Would you guys agree with that? Like you come to trading, if you can think back, or if you are new, you read some stuff and, oh, a breakout play. Ooh, a triangle. Ooh, an ascending triangle, a descending triangle, an isosceles triangle, a Rubik's Cube, whatever it is. And by the way, all of that stuff doesn't matter at all. That's what people focus on is the shape. That is almost zero value. But everybody focuses on that because by one glance, when you glance at it, it seems like such an easy thing. But the truth of it is, I think the breakout trade is perhaps the most difficult trade of all trades to do in trading. Eric, it's the inverse parallelogram. You're such a rookie. Did you hear that though? I think this is the most difficult trade to do. It is one of my least done trades. At least when I get to the end, I'm going to give you a blurb about something. And it's going to talk about the fact that strategies are just a byproduct of reading a chart. And I don't know if that makes sense to any of you. Does that make sense to any of you? Eric, you probably get that. Strategies are just a byproduct of knowing how to read a chart. They don't exist in a vacuum. Everybody wants to learn a strategy. Well, I don't even need a strategy. I can look at a chart and just figure out what to do, and you can tag a name to it, not tag a name to it, whatever it is. But that's the problem with this whole breakout thing is that to me, it is one of the most difficult things to do. Now, I may incorporate some kind of breakout concept in part of the chart of what I'm doing, but in terms of taking what traders call a breakout, it's one of the least things I do. Do you know why it's one of the least things I do? Anybody want to take a guess? Why is it one of the least frequently done concepts by me, if you want to call it a breakout? A DTS, but what is one of my least common things? Because the good quality ones are rare. Yeah. Now, good ones don't fail very often. They fail often because people take garbage most of the time. The ones you take that are good are pretty accurate, but they're fairly rare. It's just fairly rare. Absolutely, this can be for Forex. Maz, I'm going to call you Maz. What I teach applies to equities, Forex, futures, doesn't matter. We're reading a chart, doesn't matter. Now, I'm going to have examples here of charts, but that won't matter. It's the same. But just so you know, if you're new, I trade equities, and the services at DTS are about equities. The trading room, long-term trader, I do equities because I think there's a huge advantage to doing equities, but that's another time. All right, so here we go. And actually, this all applies to breakdowns just as well. I'm going to ask you to give me a number. 10 means you love this as a breakout concept, right? I'm not getting fancy with words. Just, yeah, I would take this trade. I like it. 987, you don't like it as much. 650, it's very so-so. 650, fee 50. 321, you don't like it. 0, it's absolutely terrible. Now, if you don't like the numbers, you can just type like it, don't like it, hate it, love it. Just use words. I don't really care. It's not about rating. It's not about, I'm not doing a survey. I just want you to look at the chart and think about it for a minute. And maybe this will just put some light bulbs on in terms of what you're looking at and what you're doing. All right? All right, everybody practice and put a number out there. All right, Maz, nice job. 10, he did it. Perfect. All right. Wait on your rating just a minute. Here, because you need to see more. Here is a big blow up of the 60-minute chart. And I'm looking at going over this stock will go over that silver line. And that's what I'm talking about as the breakout on this stock, going over that silver line. Now, before you give me any numbers, you probably want to see anybody probably say, hey, show me some other time frames, right? So there's a 60-minute chart, and here's a whole 4-packet chart. So you have the 60, that's the 60, this is the same chart. That was this chart here. That's a big 60. There's a little 60. And there's your daily 15 and 5. Now, on some of these, it depends on what are the breakouts happening. Most of these are daily or hourly chart breakouts. So sometimes the 15-5, maybe you don't even care that much about. But they're there so you have what information you need. Because if you were really trading and about to take a trade, you would have whatever charts you want in front of you. Okay? So take a good look at that. We're in no particular hurry. I'm going to give you, I'll babble here for a few seconds, look at my notes, see if I have anything to say about this. And then I'll ask you for rating. I don't care if you throw it out there, just informal here. Just, when you throw something out, then everybody's going to follow you probably if they think you know what you're doing. Okay, good to go. Go ahead and give me your ratings. How do you like this? It's a 60-minute hourly chart breakout right there. How do you like this thing? 10, you love it. 5 is so-so. Oh, read what it says here. I'm sorry. Read what it says here. As a little swing trader, I'm so sorry. So important. Your holding time is critical because you could say, well, Paul, I just want to take it for 6 minutes and I'm done. This is off the hourly chart. So looking at a 2 to 3 day swing hold. Okay, 2 to 3 day swing hold. Got it? So redo your number if you didn't read the slide there. Looking to hold it a couple, 3 days. 60-minute chart, daily, bum, 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 bum. Interesting, isn't it? We're all over the map from a 2 to a 10, actually all over the place. Here's what it did afterwards. There's removing the little hidden panels there. And the arrow is kind of where, I blanked the chart off. So the right edge is blanked off to see what happened, and there's what happened. So what happened was it had a bounce on the 60-minute chart that lasted part of a day. Not even much of a day trade. And then in terms of a 2 to 3 day hold, it fell apart completely. My rating for this, are you ready for this, is that I would not be allowed to do this. A DTS student would not be allowed to take this as a breakout because it is not a breakout. I'm gonna hold off on more comments until I do the next chart because they're kind of related a little bit. So that's not even allowed to do. By the way, keep in mind, trading is about odds, right everybody? Brock, it's about odds, correct? So I can tell you that's the worst trade in the world, and you could tell me I just did one like that and it worked, or I can even show you a chart that kind of worked. It doesn't mean it's a good trade, right? This is not allowed. And when I say something's not allowed, there are certain things to me that are just wrong. And taking that long is just dead wrong. Now again, as a day trade, the hourly chart looks nice, right? The hourly chart looks nice. And that's why you got a little day trading pop. But it's going to be the daily chart conflict that tells you can't hold this 2 or 3 days, period. Let's take a look at this next one. Then I'll probably have some comments on both of these. ARDX 60-minute chart. We're going to pop above this base right here. There's a 60. We're looking at a 60-minute open quote breakout end quote. Here's all the time frames: 60-minute, daily, 15-minute, 5-minute. Again, the 15-5, I don't know if they're terribly valuable to you, and this one they might be, depends what you're looking at. So take a look at it. Right when this uncovered part, we're going to pop above that area. And the same question, looking at a 60-minute type breakout, holding it 2 or 3 days. Go ahead with your numbers if you got them. We're going to pop above the top, and the question is, would you go long as a breakout on that hourly chart? I'll wait a second for a couple more numbers. Have a sip of my Frosty Cold Coca-Cola. 5, 7, 7. Now, I don't want to get hung on semantics, and I'm not trying to trick you, but there's a huge difference here with what I'm about to say. This is absolutely not allowed for a DTS student. It's a 0. You cannot ever take this trade long. As a matter of fact, if a DTS student said to me this is a breakout, I don't know what I could do to him. If he was in the room, I'd smack him in the back of the head. This is not a breakout by any, well, yeah, this is what we get into being a transition, right, Dave? It's a transition. And there's a big difference because how you trade it is huge. The odds of, now, because the daily chart is maybe what you're going to call in a support area, this may eventually, and this is very recent, this is the last few days here, so this may eventually rally, but here's the issue. If it rallies and you're not in the trade, how does that help you, right? The odds of this thing going above the 60-minute base and then continuing higher are extremely rare. And the secret here, if you will, and again, I'm not into, I don't want to make it sound like a big deal, but it is a big deal because understanding a chart's a big deal. And the simple thing is that, you ready for this? Here's the language that'll help you in the simplest form I can say it without getting into it too much. You can't break out from a downtrending base, period. Do you ever hear this expression in trading? I don't know, some of you, if you're new, maybe you haven't heard this. There's something called the trend is your compadre, amigo. The trend is your friend. That's it. Yeah, the trend is your friend. You ever hear that one? That's one of the only, all those stupid sayings you hear when you start trading, they're almost all wrong. They're all useless, stupid, idiots make up stuff to write on the internet. But the trend is your friend, believe it or not, is one of the true classic things that lives on. How can you say you're trading the trend when you're going long a downtrending stock? Just think about that a little bit. And that's one of the things you'll get out of this tonight, if nothing else. Now, here's the thing I wanted to say that I forgot when I started the class that I wanted to write down. You may, in your mind, and think about this a minute, and I've been teaching a long time, you may in your mind be saying, oh, Paul, I don't agree. I've done that trade and it works like crazy. Now, here's the funny thing. If you have stats that have this trade that's on the screen right here identified, and you can prove to me that you've done this, I'll listen to you. But here's the thing. What do we tend to remember about our trades, everybody? It's just like me golfing. What do we tend to remember about our trades? Yeah, the ones that work, the winners, right? So you take this trade and you stop out. You take it, you stop out. You take it, you stop out. You take it, and boom, I got it. And what do you say? That's a great setup. And this is the whole thing about tracking and everything. To me, it is one of the key secrets. I don't care if you're a seminar student of mine or if you're trying to learn on your own. The secret to always getting better is evaluating your trades and understanding them. And this is where you would find this out. You are not going to make money very often in this. In the room, guys, in the trading room, how many times do I identify whack-a-mole, right? And I'm right, what, 90% of the time? How many times have you heard of whack-a-mole? Whack-a-mole, guys. There's several seminar people here, right? Whack-a-mole is art, right? Very accurate concept, right? The whack-a-mole. So this trade here is illegal just on the chart we're trading. That's a downtrending 60. If you go back to the last one, which is why I want to wait, MNST, this chart is an uptrending 60, but you're playing it inside of a daily chart that totally conflicts. Look where you are on the daily. You can't go long there. And that's why it popped on the hourly, failed on the daily. Let's go on. 60-minute breakout. Look at that nice, narrow base. Even I have to say, that's kind of a nice, narrow base, isn't it? Not bad. There's the 60. There's the other time frames. The daily is kind of squished. Sorry about that. But, you know, that's the little area in there. That's a consolidation. 15-minute 5. Again, I don't know how terribly relevant there. We're going to pop above that tight little 60-minute consolidation. Ratings. Go ahead. 5, 4, 3, 2, 1, go. What do you got? Hey. I wonder if I did this one first, if everybody would have said 0. Yeah, exactly. This is pure crap. Like I say in the room sometimes, I wouldn't take this trade if you even paid for my losses. It wouldn't be worth my time to goof around with it. Yeah. Well, the 0 to 60 is part of it, but you know how I was kind of saying, oh, what a nice tight consolidation. Go ahead, somebody who knows what they're doing. What does a tight consolidation mean? What is decreased volume? Here's one of the 3 uses of volume. One of the only 3 uses of volume. Volume down to zip. Tight consolidation. What does that mean? When you have a tight consolidation and you have when you have a tight consolidation, no volume, it means that the trend going into the base is likely to continue, not reverse. Guys, the worst thing you can do in your trading is presume that prices are going to reverse, right? For no reason. But yet, what's funny though, Mike, is crap like this is the most popular thing a lot of rookie people do, and that's why I'm bringing it up, right? All right, so AMC, what does it do? Oh, we don't know. I didn't remove the thing. It's crap. Don't worry about it. I didn't peel the stickers off here, but don't worry about it. All right, next, RCL. I wonder what they make. 60-minute breakout. How do we like that? There's a blow up of the 60-minute chart so you can see it. And there's the 60 up here, a little smaller with the daily 15 and 5. Again, because we kind of tailed off into the abyss there, the 15 and 5 aren't really. So you're saying it runs up from there and breaks. On RCL, I'm saying we will trigger. On all these, Eric, we will trigger for whatever that means. We are going to go over the base. If we do, would you take it long as a breakout? And remember, we're playing the 60-minute chart. So this is the chart we're playing. We're playing this 60-minute chart right there. And that's what the daily looks like. Room to run. Yeah. Red, your question was, I said specifically that was for a swing hold for 3 days. And that's why I said that it could be, you could have made a little money as a day trade because the hourly was set up properly, but the daily was going to whack it. Yeah, this is not, some of you are getting very advanced. I'm not here to get all hung up on the type of entry and how much did it trigger by. All I'm saying is when you see this chart, maybe look at it this way. When you see this chart, would you save it for the next day and say, hey, I'm interested in that? Maybe that's a way to answer your question, Eric. I'm not trying to be too, Eric, I think you're getting a little too nitty gritty here. You're too advanced. I'm just saying if I see this chart, I see this daily, I see this hourly, would I save it? In other words, I would have no desire to save AMC ARDX. I wouldn't ever stop on those. Would this be a relatively good breakout is the question. Waiting for a couple more. I do like this. This is a good breakout play. This is a good, this could be considered. Now, I'm not thrilled about this entry in a sense, and the next day we end up gapping up here, so it kind of helps it. But I think one of the issues, like Eric was talking about, is people talking about SSS. They're saying if you're way down here and you have to run all the way up to here to break the top of the base, maybe it's a tough run to make. But generally speaking, on the hourly chart, that's a pretty tight, you look at the daily chart. So you have the daily chart cooperating here. You have the daily chart that's actually in an uptrend sitting above the prior highs. You have a tight hourly chart. I don't love the entry here, but yes, this is more the type of thing that we want to be looking at in terms of breakout trades. Next, getting into some new topics here. CRM. Now this is a daily chart breakout. I want you to rate this as. There's a blow up of the daily chart. No, we're not on the hourly. This is an actual daily chart, full-fledged swing trade. And while I have this on the daily that's kind of blown up like this, I want you to consider the question. And when we say swing, let's just talk about getting up to here somewhere. So kind of like, do you feel there's resistance in here, or do we have a clean shot to there? We're going to break above this silver line. Again, daily chart. I don't care if it's, holds for a morning, but just as a daily chart going up to here, how do we like it? Use past tense, that's fine. Here's all the charts. So there's the daily, that's what we're evaluating here. We're evaluating the daily chart as that breakout. And that's what the rest of on the rest of these time frames here, I'm not sure any of them are really relevant to the answer. If you don't like it, also give me a why. Why don't you like this one? Okay, uptrend is broken, so Mark's back to what we said before. You're trading a downtrending pattern long, right? Man, I don't really care about the declining 50, Joe. Joe, let me ask you this question. If I was taking a weekly buy setup, right, and then I looked at the daily chart, wouldn't I be trading that into a declining 50? True? The declining 50 isn't the final answer. On that time frame, you don't want that probably, right? Well, let me ask you just a quick question to summarize this a little bit. I'm going to go back to the bigger blowout here, the daily chart. When you come above this line here, is there resistance here or not? And I don't even worry about that. I'm going to tell you that's not resistance. That's not resistance. Is there resistance here or no? But isn't there kind of a void up to there? Yeah, you guys seem to know that, yeah. Right. This is the highest resistance type pattern there is. This is huge resistance, yes. And this is where there's this fallacy notion out there that, oh, you look to the left, if you don't see anything, there's no resistance. That's pure, yeah, exactly, Eric. That's pure garbage. This is the highest resistance pattern there is, even though you don't see anything there, because of trappage. Yeah, exactly. Anybody who's long up there can't wait to get their money back if this ever pops above the top of the base. And guess what's going to happen? It's going to pop above the top of the base, and it enjoys a day up. And that's why I said this swing trade. It has a day up, and you can kind of see why, right? I mean, there's a lot of stuff going on here. Remember, trading, learning how to read a chart, is understanding the balance between the bulls and the bears across multiple time frames. And it's understanding who wants to buy and who has to buy, who wants to sell and who has to sell. So when we popped above this base, we created, there was a short-term concept of people who were short in here that had to get out of that. But then we got hit with a bigger group of people that said, no, we're not going anywhere. So it had its one day up, and then that was the end of it. And then it went into, you can see down here, it went into free fall. I think it's even, is it lower today? I don't remember. I think that was from a couple days ago. CRM is, I was just curious. Oh, it did earnings or something after that. That's why, yeah. It had gapped down huge after that, but that's not relevant to education. But this again is just 2 or 3 days swing, right? Yes, my question, Reg, was, would you take a break above that silver line as a swing trade, trying to get it up into here somewhere? And the answer is you would never do that because that's a huge daily resistance area. So stuff happens. It held for a pop. I wouldn't take that as a day trade either, even though it worked, but I wouldn't take it as a day trade because if the daily is 100% fighting me, in my view, I'm not going to go and try and sneak in a day trade. You know what I mean? I'm not going to try and thread the needle and see if I can just squeak through the door before I get my leg chopped off, right? There's easier stuff to do. Make sense? We good? Any questions? Any questions? We're clicking through these pretty quickly here. Well, Reg, that's one of those forest or trees things. As you step back and look at it, it's kind of probably end up being a PTR in stage four. It came down from a stage three. I mean, you could call this a stage three. I'm not sure what you're talking about. This is a stage three, yes, for sure. And then this becomes a PTR in four. Yeah, yes, definitely a stage three, yes. And it was, as gap downs go, you never want to play back into it soon. But this is especially nasty because you can already see, right, the selling and shorting going on right above you. All right. See, any questions, anything? Any questions so far up to CRM here? I think I have like three more to go and then an end of the time lecture. I'm not going to show you the other time frames here because they weren't relevant. Here's a breakdown. This is the only bearish one I have. I want you to rate this as a breakdown. Breakdown. So go ahead whenever you want to. I'm going to put a little asterisk that are separated. No other charts. That's the only slide there to rate this one. Rate this as a breakdown. Reg, did you mean between 0 and 1, or do you actually mean 1, 0? Ben, 5. What? Come on, the rest of you. Come on. Give me some numbers. Nobody knows who you are other than me. And if you type something really silly, I'll send your email to everybody. 7, 2. We're kind of all over the map. Look at that. 2. It's almost like we're just throwing dice or something. Rolling dice. 2, 7, 5, 10. All right. Before I make my comment on this slide, I want to come back. I want to get a point on this next chart, and then we'll come back to this one, okay? 60-minute breakout trade. We kind of had this, it's kind of maybe a little two-step thing, right? We got kind of a consolidation, not a Texas two-step, but we had a little consolidation here, kind of popped above another consolidation here. So we're talking about that consolidation there. Going above the 60, and here is all the time frames. 60 daily. Matter of fact, you may even want to call this 60/whatever daily chart breakout, if you want to call it that. So let's look at this popping, trying to get up to the prior daily highs, let's say. We don't have to go any higher than that. How do we like that as a daily/60 breakout? Go ahead. Okay, this is why I think this is an interesting presentation. This is actually a short on the breakout. And those of you that are struggling with this, don't read everything from DTS. This was the topic of an educational email I sent out pretty recently. Maybe I should pull it out real quick. Right? Remember, this is OWL. Remember? I sent you an educational email, and I actually shorted this one on the breakout. That's how confident you can be sometimes that something is not a breakout. So here's a chart where a lot of, I would say, more novice traders look at this as potentially a breakout. And I actually shorted the breakout. Give me 1 second. Let me pull that out for you. Sorry, I should have had this link all set for you. I just assumed you'd all go, oh, that's a short. But do you see how this gets tricky? Now, here's kind of the proof, right? I mean, it's one thing to look at a chart after the fact and say, oh, yeah, that's a terrible breakout. But I shorted this, right? Remember? Do you guys remember the lesson? How many people read that lesson? Give me a yes, a why. Who read that lesson? It was only like 3 weeks ago, 2 weeks ago. Who read it? Yeah? Okay. And this is a trade I did in the room with everybody there watching. Let me give you the link to it. And that's why a lot of times, I like doing these presentations because it's not just sitting here and going, oh, here's what I think and here's why the market did this. And this is stuff I'm doing in real time that defies what most people do. Yeah, here it is. Here, if you missed it, it's in your email somewhere, but there's a link to it, so you can go read about that, right? So we've gone the full gambit here, right? We start off with some charts where rating the breakout to me were a couple of charts that were not even breakouts. They were things that you cannot call a breakout, right? They were downtrending consolidations of some kind or other. We went to a chart that I did like. We went to a chart where the breakout, unquote unquote, was going back into a gap down, so you don't ever want to do that. OWL, where this breakout is actually a short. And why is that? Well, because the daily chart, this is the classic whack-a-mole thing. You generally speaking, you don't want to play back into that red bar. And by the way, I think didn't OWL really get killed after this? Let me look at my chart. I think OWL got killed, right? Who knows? Did you get that? Who? Yeah, the last 4 days, OWL took a real hit. Yeah, and it's not a surprise. I mean, I don't understand why you would, want to play back. Well, because maybe you're not familiar with reading charts, but this stuff means something, right? That means something. That's not Glenn and Ben shorting the gap up that day. So it dribbles back, a little educational moment. Why does this happen? Why does this happen? That red bar, and then followed up 2 weeks later with that red bar. Why does that happen? No, well, that's not shorts. That's dropping. That's people selling. That's not covering. Shorts covering would be buying, right, Jack? You mean through here? Shorts covering isn't an answer. Yeah, but it's still it's what's causing the red bars, and why was there space between the red bars? What's causing the red bars though? Yeah, selling. Well, who's selling? So this is we talk about how charts are made, right? How are charts formed? You and I don't make charts, right? We read them. So I've never been, I think most of you know, I've never been on Wall Street. I just started reading charts. I've never left my desk. I don't know what Wall Street is. I've never been a market maker, but I can tell you from common sense how they operate. Now, if I'm a market maker, if I'm a big institution, and I get an order, somebody wants to sell, 8, 10 million of these shares. I don't know how active the stock is. If I get a big order to sell this, I don't know what their formula is, but I know they probably have some kind of computer model. Because here's the thing: if they, what's the price up here? I can't even read that. 30. I'll read it over here. 1950. So a client says, "Look, I want to sell 8 million shares of this. I've had it forever, right?" And the stock's at 19. So if they go in there and they just pound the heck out of it, and it drops to 17, and they give it to their client at an average price of 18, what do you think that client's going to do? I'm talking with an actual market maker listening to me, so I better be pretty accurate in what I'm saying. What's that client going to do? If he gets an average, yeah, you fire him, yell loudly, right? So a big part of what market makers have to do, what firms have to do, is to figure out this formula, if you will, right? And they probably have a computer model, and I don't know what the formula is, but here's what I do know. Part of the formula involves pound the hell out of it right away, before the rest of the world wakes up. Everybody's sleeping, bam, 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 and maybe they get 60% of the order, and I don't know. Now here's the key thing. If there's another market maker that needs, if there's another big institution, there's competing sells going on, what's going to happen to the stock? If there are multiple big people selling, what's going to happen to the stock? Bam, 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 right? Just going to go into free fall. But what if there's only one person selling? They have control. So what do? They pound the hell out of it for a day, right? And then a bunch of stupid traders come playing with themselves, goofing around, and finally the price gets dragged back up to some point where they say, bam, finish the job. So they make back $1 of, they probably have an average cost of $1 higher selling by letting the idiots come back and bring the price up for them, and then they whack it again. Does that make sense? So when you see patterns like this, you don't be one of the idiots helping it come back up. You wait to short, right? Does that make sense, everybody? And you don't have to know the mechanics behind it. You just have to recognize, bam, bam, bam. I'm not going long. But you don't need the mechanics. I mean, I was through the internet to kind of say, hey, here's how charts get formed, and here's what happens. You're confused on shorting it? What do you mean? On why I would short it? Because this is, Ben, if you ever take, here's why, Ben, have you ever taken a breakout and lost? You just got pounded? You ever taken a breakout trade and then lost because it fell after you got in long? I'm sure you have. Everyone has. That's why we're here talking about this. Okay. It's very common for somebody. So in other words, when I see a chart and I say, you know what? If somebody said, Paul, would you take that breakout? And my answer was no, 100% no, because I know it's going to fail. If I know it's going to fail, Ben, right? Why don't I go ahead and trade exactly what I said? Breakouts are not necessarily bullish. There are 3 types of bases, Ben. You ready for this? 2 of them are meant to stay sideways. In other words, you would never ever trade them as a breakout or breakdowns. Most of the bases you see are not meant to break out. They're meant to stay sideways. So if you accidentally pop over the top and you go long, you're an idiot. I'm an idiot sometimes. If it goes below the bottom like this and you go short, you're an idiot because it's meant to go sideways. And that's why it is such a long, diligent process to find the proper ones that may continue higher and lower. And that's what the whole thing about understanding a chart is. I kind of just did my last slide a little bit. Does that help a little bit? KSS, 60-minute chart. I want you to rate that as a breakout. There's the big chart. 60-minute chart of KSS. I want you to rate that as a breakout. Going to the upsides. It'll go above the silver line. And again, what I wanted to focus on is just simply saying, if this was something I found, would I put this on my screen and would I be excited about going long? I'm not interested in the entry or, secondary signs and blah, blah, blah. Just simply, hey, is this a good setup to be going long? That's all. And here is the other chart. So there's your 60. Daily's kind of, a little wonky, but that little consolidation is that there on the daily. And then the 15 and 5 look like that. Go ahead with your answers whenever you want, whenever you feel like it. No particular hurry. Wow. What do you not like about this? Here's the little clue to me. Oh, my answer is I like it a lot. I traded this. I traded. So the one I showed you before, the RCL, I did not trade that. I just liked the chart. I didn't do it. I traded this one. The daily is messy. I will give you that, Joe. But here's the key thing about being trained properly, and that is you have to know what you need to see from every time frame. You need to know what it is you need to see. The key on this one to me, and this is one of these, to be honest with you, this is one of these, sometimes if I scan it and I see a chart, I think about it. I wake up thinking about it. I was like, wow. Like, wow, holy cow. Here's what I love right there. That is sitting on top of that. Do you know how much that means? That you're doing this, you're doing this, you're doing this, you pop above, and all day, not just for 2 minutes, all day you sit there. That was the key to me. And then the question is, what do you have to see from the daily chart? Well, it gets a little complicated, what you need to see, but I was okay with what was there. Here's the other thing I wanted you to pick up. Here's the one time where the smaller time frames mattered. Do you see that this is actually a breakout on the 15 and 5-minute chart? Do you see that? And that's why I put all the time frames here. On all the other charts, they really didn't matter because we're looking at the 60 daily. But what does that mean? That means that this consolidation is kind of that precise, that tight. And this is where you get your, I don't want to use the term, but throughout the day, all this thing, think about what happened here. And this is what I mean by the language of charts, by understanding what's going on. You pop above these two prior pivot daily highs, right? Language of charts. When that happens, what's the question, everybody? When this happened in the morning, again, we're not trading it this day, we're trading the next day. When this popped up this morning, I would never trade it this day, right? As a matter of fact, what would I expect to happen? What would I expect to happen right there when we popped above these other two daily highs? Yeah, I expected to come back in, right? That's what I would expect. I wouldn't be trading this. I wouldn't short it because it's too strong everywhere, but I'd never go long because this is a terrible entry and blah, 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 blah. But guess what happens then? The question is, are there bears waiting to sell this, right? That's the whole issue. The bulls popped it above the top, happens every day, and then the bears are going to whack it down. Well, what happens? Look what happens throughout the day. Look at this. Question asked, question answered. There's not a bear around. Or we don't know which it is, or the bulls, look at these bulls continue to bid for this higher and higher and higher right into the close. You see that? Now, I will grant you the daily is sloppy. Actually, in this one, I should have said a 1. I don't even know how far did this thing go. Oh, yeah, no, it did great. You did fine. Yeah. So again, and I want to really emphasize this because I know most of you are out attending different lectures from different people, whatever. If you have the opportunity to talk, I know a lot of rooms don't even let you talk, but if you go somewhere else, ask the person why. Ask if he understands. Anybody can look at a chart and tell you what happened yesterday and explain it like a genius. So this is a trade I took. So I'm not just sitting here. Do you see what I'm saying? I'm just sitting here, and the room took it. I was in the trading room, right? Somebody in the room, this is whatever date it was. Somebody remember KSS, anybody? Yes, yes, yes. Okay. So this is a trade I took, right? Yeah, it was last week. Do you see what I'm trying to say? It's not just, past tense, gee, let me explain this. I did this in real time. So, I mean, this is really learning to understand how to read a chart. All right, let's move on. Breakout. Only chart you're getting for this. How do you like this as a breakout? Go ahead whenever you're ready. You're not going to see any other charts. This is the only chart for this. How do you like this as a breakout? Oh, does anybody know what I did here? A couple of, I don't know who. I'm not going to go back and look, but a couple of you are going to feel so embarrassed. It does look good. I love it. I love it. Yes. Remember this chart I showed you? That one? It's the same exact chart. Some of you rated it much higher. See that? I took this chart, I went into my platform, I changed red to green, I put it in PowerPoint, I flipped it upside down. This is the exact same chart. What's the only difference? Bullish, bearish. Permabull, I love it. I don't know what bearish is. I'm not going to point them out, but two of you gave this a 5-point difference. 5 point. What does that point out to you? There's no way you should do that, right? It means that you are a permabull, you can't see the short side, and we're bullish more than we're bearish across time and across price, but you will give everything back in that period of time. People do it all the time. Thanks for the translation. I'm one of them. One of my favorite things to do because, most people are kind of bullish and kind of perm bullish, and you got to be careful about that. A couple other just side comments that I didn't do any slides for, but a lot of times, and again, this is maybe semantics, but sometimes I hear people say, oh, a breakout. Okay, it's not a breakout. I mean, not even in the English language, right? You have to grant me that. Certainly is not a DTS breakout play. But even in the English language, we have to be a little more precise in that, right? You can't look at a dog and call it a wolf or whatever. That's not a breakout even to a novice trader. This is just something that is trading above the prior pivot high. And the odds are, right, if you took all of these as breakouts, how would you be doing? Slaughtered, 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 right? Because actually all that's happening is you just have a sideways pattern that's slightly tilted, right? A breakout, using it with that type of language, is not any kind of strategy ever. It's just an observation. Oh, we went above something on the chart. Well, sometimes you can short that. Sometimes when you go above something else, like I showed you, I shorted something like that, right? Yeah, but I mean, it's just nothing. The point is, it's not a strategy to go long, and that's one of those common things I hear a lot of times, right? And just in general, just because you're breaking to a new high also does not mean it's bullish. When you go to new highs, what are the two things that happen? New high. What are two things that are going to happen in that new high? You're going to get people buying the new high, and you're going to get people selling all that profit. So a lot of new highs just get sold. So I mean, again, a new all-time high even is not a strategy per se. Now, if you're at new all-time highs, you're probably bullish overall, but is that necessarily the best entry? If you just had a 4-week run to new highs, it's probably the most inopportune time to go long in general. So I would like to conclude this with a talk that for me is always a difficult talk to have. I love what I do. I enjoy what I do. I'm still teaching people for a while. For those of you that are new, I'm real. I do this. I've trained a lot of traders. I like it. I love it. What's difficult sometimes is getting people to understand what's involved in learning something. And then I always have to cross this line of sounding like some salesman or something. I go, oh, boy, if you want to learn this, you better sign up for a class. I don't go crazy asking people to sign up for classes. You guys do what you want to do. As I always said, when the time is right for you, if you feel it's right, if you like me, if you want to take a course and learn how to trade, you'll do it with me. And I know a lot of times you go anywhere, it sounds like, oh, if you want the secret sauce formula, you got to sign up for this or that or whatever. But I just want to point out that I hope you understand, and what I want to show you, this is from the seminar program. And there's some people here from the seminar program. This is the breakdown breakouts page. And this is slide 217 out of about 330 slides. So in other words, what are we doing for the first 200 pages? Can anybody tell me? And this is just a point I want to make. It's common sense. What are we doing for the first 200 pages? Before I even introduce the DTS breakout play, what are we doing? Exactly, Rick, perfectly stated. Laying a foundation of understanding. I could rattle off 6 bullet points of what I look for. It would be meaningless to you. And you know what? About a year and a half ago, I got sick of hurting traders. How do you hurt traders? By just giving them the tip of the iceberg and saying, well, look, here's what you look for, and then they come back. And Trade of the Week videos are a good example of that. I like putting them out there, but people get hurt by them. Because all the time I get back an email, oh, Paul, I did exactly what you did in the Trade of the Week video and I lost. Well, okay, guess what? You didn't do anything, right? Because the Trade of the Week video, while I give you a 3-minute summary of what it is, it involves multiple time frame analysis. And the whole thing, the whole class, all boils down to here's one chart. I look at 1,000 charts and I find one that I like. I don't want to make it sound like it's hard or difficult. It's not. And actually, that's something I have coming in an email to explain that I have always been guilty, and I know several people, when I get back to them, say, I didn't sign up for anything to you because it really sounds complicated and difficult. And this other guy said it's super simple. Well, maybe I go too far that way because I'm trying to fight the tide of scam artists out there that are saying, oh, learn one strategy for the morning and all this crap that your common sense should tell you is never going to work. And this is where, again, I say that a strategy is kind of a meaningless thing. A strategy is the byproduct of knowing how to read a chart. You know how to read a chart, and I can come up, and I gave an example, this thing is an email. It just some setup where I said, oh, you know what, that's a short. What do you call that, Paul? Well, I call that, I guarantee you the price is going to drop, and I'm going to short it. That's what I call it, because when you learn how to read a chart, you learn that, and that's what I teach people is how to read a chart. Now, yes, we kind of consolidate some notions and put them together and put names on them like a DTS breakout play. But like I said, this setup to happen is relatively rare. You know, it's not my bread and butter. I don't go around looking for breakout plays. And when you do, what is the absolute most critical thing to entering a breakout play when you do, somebody? Which I didn't even touch on today, which is, it's more important than finding the right breakout. Exactly, mark the entry. There are different entries that will vary inversely with your confidence in the trade, and you have to know all those entry concepts. The entries are way more important than actually finding what you think is a good setup, you know. So I hope you understand what I'm saying there. There's, for those of you that are, you know, really looking to learn and you're serious about it, you know, get serious about it, really learn what you're doing. I hope you're impressed with some of the stuff we learned here today and went over. Questions? Thank you, Dave. Dave is a seminar student, and whenever he can, he says, you will be amazed at what you don't know, because it's one of my lines. Paul, I'm just curious, on an unrelated question, for intraday trading and using the hourly chart as one of your analytic tools, does it make sense to leave one pre-market, post-market trading candles turn? Oh, good question. Reg is a great question here, so don't run off here. I'm going to answer it in a very definitive term. It seems smooths out the hourly trend. Sometimes I wonder if I see the trend. Let me make sure I understood that. And also for the recording, let me read this clearly. Paul, just curious on an unrelated question. For intraday trading and using the hourly chart as one of your analytical tools, does it make sense to leave pre and post market trading candles turned on and showing? Reg, absolutely positively not. I don't do that. I strongly advise you not to do that. And I've never done that. Now I have one little tiny pre-market chart that I use only pre-market when I'm looking at my gaps. Why? The pre-market pattern is worthless. Now I know some of you just fell out of your chair and dropped your coffee and everything, but the pre-market pattern is worthless. You don't believe me? Prove me wrong. Go show me where any of those levels ever made a difference. They don't. Now I don't necessarily know why. All I can tell you is I've looked at them for years. I don't look at them because they're worthless. They're just confusing. They don't mean anything. Stock does whatever it does pre-market, and then it does what it does when the market opens. A small point, but number two, Reg, remember your moving averages would be screwed up. Now maybe that doesn't matter, but your 20-period moving average won't be where someone else's 20-period moving average is. Now, again, I don't really care what moving averages you use or if you use them at all, but the point of using moving averages that everyone else uses is a self-fulfilling prophecy feature, right? And you will lose that. But the real point is there's no point in having it there. It only confuses you. The levels are meaningless. One of the reasons I know is that certain participants cannot trade the pre-market. I'm not really sure. I think it may be firms that own that stock, but the truth doesn't come out pre-market. It's just whatever. It's just this little playground. And then when the market opens, it opens. So the only reason you would have them on there, Reg, is because you would say, right, there's a level that's going to be support or resistance, and it's not. It just never is. It never works. I always think that there's a handful of terms that's kind of like the cool kids table in high school, you know, that using the VIX intraday, worthless. VWAP, worthless. Pre-market charts during the trading day, worthless. Prove me wrong. What I always say is, it's never made me a penny. If it doesn't make me a penny, why put it on your screen? Look what matters, keep it simple. How is that for a definitive answer? You may not like it, but how is that for definitive? Anyone have any rebuttal to that? Comments, questions? As a matter of fact, it's quite the contrary. Do you know why when I do my market analysis, you know why I look at the QQQ instead of the futures? Anybody? Why do I look at the QQQ and the SPY and the IWM rather than looking at the NASDAQ or the S&P futures? Why do I do that? Because I want to see the gap. I want to see that void shut off, right? I want to see the gaps. I don't want the chart. I don't want to see into the close and then dribble, 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 no volume, no powers, dribble, dribble, dribble. There we go. I look at the pre-market just to see what it's done. And then it's gone. I never look at it again. Okay? Any other questions on anything? It's 6:02. By the time I trim the presentation up, it'll be down more. Ben, thank you. Okay. Mostly on marking them? On marking them, okay. Well, to mark them, Ben, I think you said you're new. To mark a chart, you have to know what it is you want to mark, right? Yeah, and that's the key. So you have to learn how to read charts, however you go about doing that. Well, this is Wednesday. We have second class in the seminar program is Saturday, so nothing going on. Oh, you know what we're going to do probably next week? You know I'm going to have? You haven't done it in a long time. We're going to have trivia night. Dun, da, da, da. I did trivia night maybe a year ago. We're going to have some big prizes for trivia night, big DTS prizes, big ones. Just a fun night. Yeah, it's not even a technical night. It's trivia, literally fun trivia. Yeah, it was a blast. I wanted to do it. So I got it marked down. I got a few questions going. All right, everybody, have a great night. We'll see you, free members, we'll see you for the next free event. Trading room members, we'll see you in the morning for another fun trading day. Take care, everybody.